And welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, and Chaz Price. 419-794-3030 is the phone number. The website, arhq.com. Don't forget, if you missed the first half of the show or just want to catch up on previous editions of America's Retirement Headquarters, available on YouTube, Spotify, Apple Podcasts, wherever you consume your media. Just search for America's Retirement Headquarters. It's all there for you on demand. Now, retirees are enjoying 8.7% more in Social Security benefits thanks to the biggest COLA, or cost of living adjustment, in over 40 years. But there is a flip side. Whenever benefits are increased, more seniors are pushed into higher tax brackets. Financial planners call it a stealth tax. Is this something that you guys watch out for when it comes to your clients?
Well, doing whatever we possibly can to keep the government away from their money is absolutely important to do. This is an area where I think the team approach and taking that comprehensive approach is one of those important things to do. So, as a financial professional, I think it's important to always talk with your accountant or CPA and run the numbers. We're not tax preparers, but we work, really closely with the CPA. A lot of people choose to work with one of our CPA recommendations, or we work with their CPA to look at all the ways to keep the government away. But when you're looking at how do I avoid the stealth tax, I'd first of all say that there's probably a lot of people that say, no, I don't even know what that is.
Right.
And what it is because Social Security can be taxable income for many Americans. It can end up paying more taxes than a working family. It's not always the case, but Social Security benefits are adjusted for inflation every year through that cost of living increase. Income tax thresholds for recipients haven't changed since the first taxation of Social Security in 1984. And that means whenever benefits are increased, more seniors are going to be exposed to income taxes on Social Security. And that's a particular problem looking at like 2023, thanks to that 8.7% increase. So again, in some cases, it can be like, thanks for giving it to me, but then they turn around and take it back. Because of the historical high cost of living increases in the past couple of decades, more seniors are now subject to the 85% tax on their Social Security benefit. And again, it's not saying that 85% of it is gone in taxes. It's saying that 85% of it is counted as taxable income. But if those thresholds, if they would have been adjusted for inflation over the years, the original $25,000 threshold would now be about $73,000. And that's according to the Senior Citizens League. It's a nonpartisan advocacy group. And the $32,000 threshold for couples would be $93,200. So it's not surprising that a greater, population of the seniors have really been pushing to try to get a higher income threshold, and thus helping them pay less in some of the Social Security taxes.
Mm-hmm. Yeah, and Nolan, as I was doing the research for this, the way that I would understand, or the way that I came to understand stealth tax is, it's kind of like a magic trick. If you take a look at the Social Security tax, or let's say sales tax, because sales tax is another example of a stealth tax, where like a magician will kind of show you the part of the trick that he wants you to see. Like, hey, take a look at this. The audience can see, but then once I pull the rabbit out of the hat, there's a lot of other hidden mechanisms behind the trick that the audience is unaware of, like, where that secret compartment is for the rabbit or whatnot. So, just as an audience in a magic trick may not be aware of all the hidden details behind how it works, that's kind of how our retirees, I think, might imagine something like this, and that, ultimately, you're paying a tax is imposed, but you just don't know where all the other implications are. And so as a financial advisor, or maybe not even a tax, maybe even a tax reduction, like say, for instance, the VAT tax, the government might say, well, we're not taxing consumers, we're just taxing businesses. Don't worry about it. But then inevitably the business passes the tax back on to the consumer as a higher price. And so it's stealthy. It's kind of a way that someone might get around trying to actually show you what they're doing, and it's just like a backdoor, underhanded way of taxing you. And so my job as a financial advisor is to kind of open up the hood, let you see the magic trick, understand where all the moving pieces are and some of the hidden components of the government's taxes, and and some of the things that they're doing that can really affect your long-term success.
Yeah, I think the big takeaway, I think for somebody that's close to and moving into retirement time, if you're not on Social Security right now, you need to really understand the impact of Social Security optimization and how Social Security can make your life either more tax efficient or it can work against you, and like what we're talking about here with this stealth tax. Because I ran a scenario for Rick and Kathy, and when I looked at their scenario, during their working years, if they had adjusted gross income of about $111,910, their total tax using some software called Tax Clarity was $9,574. That's an effective tax rate of 8.56%. Yet when they optimized the Social Security, meaning they delayed taking Social Security to later, what it allowed them to do is reduce the amount of money that they took from their retirement account because they had more Social Security by waiting to optimize their benefits. So they had about, again, the same type of income. They still had about $112,000 of income, but their tax rate was actually lower. It was $80,697. So the effective tax rate was actually lower. It was 7.74%. Bottom line, folks, here is there's taxes out there that the government is wanting to get from you: stealth taxes, Social Security taxes, sales taxes. And the best way is to work with a professional that can look at your individual situation and work hand in hand with a CPA and accountant to run a tax roadmap for you. Again, the mistake here is just waiting till March or April and just filing your taxes and then putting back in the filing cabinet. The end of the year is not too far away. If you have not run a 2023 tax roadmap, give our office a call. We can put your information in our software. We can help start running the analysis for you. If you're not drawing Social Security, we can run some projections to help you think ahead on what could be the best approach for your individual situation on trying to avoid the stealth tax.
It's pretty easy and honestly kind of low-hanging fruit to talk about the shortcomings of the government. Let's give credit where credit is due. They are very good at finding ways to take your hard-earned money without actually calling it a tax. This stealth tax, this COLA increase, and what that can do to people's benefits is one of those such ways, but there are ways to mitigate that. Having that tax roadmap done is a good way to start, and you can get started by giving a call, 419-794-3030, or visiting the website and scheduling a time there as well, arhq.com.